Let's say your customers owe you $200,000 in unpaid invoices. That's great, right? But your payroll is due this Friday. And the bank? They're telling you maybe 60 days for a loan. So what if you could turn those invoices into cold, hard cash in just 24 hours? Well, you can. It's called invoice factoring, and by 2026, it's going to be a massive $4 trillion industry, and the craziest part, most business owners have never even heard of it. But it's an incredibly powerful tool that's built to solve one of the biggest headaches in business, just waiting around to get paid. So let's dive in and break down exactly how you can use it. Okay, first things first, and this is the most important part to get right. This is not a loan. I'll say it again, it is not a loan. You're not taking on new debt, you're not messing up your balance sheet. You are simply selling an asset that you already own, your accounts receivable, to unlock the cash that's already yours. Think of it this way, it's your money, you're just getting it today instead of 60 days from now. So what does this actually look like day to day? It's honestly pretty simple. Step 1, you do the work, send out your invoice, and then you send a copy to the factoring company. Step 2, within a day or two, bam, a huge chunk of that money, we're talking 80 to 95% of the total, lands right in your bank account. You can use it for payroll, new equipment, whatever you need. Step 3, the factoring company handles collecting the full payment from your customer, professionally and on time. Then, once your customer pays them, we get to step 4, they send you the rest of the money minus their fee. And you're done. No more chasing payments. Okay, let's quickly talk about the numbers so you know exactly what's going on. The advance rate, that's the big one. That's the percentage of cash you get right away. The factor rate is just their fee for the service, usually a small percentage per month. And the reserve, that's just the small chunk they hold on to until your customer pays the invoice. You get that reserve money back at the very end. Simple as that. Now, you might be wondering, what happens if my customer never pays? That's a huge question, and it brings us to your two main options. First up is recourse factoring. This one has lower fees, which is great, but if your customer completely flakes, you're on the hook to pay that advance back. Then there's non-recourse. It costs a little more, but here, if your customer goes bankrupt and can't pay, the factoring company takes the loss, not you. It's basically like buying insurance for your invoice, giving you that extra peace of mind. You also get to choose how you want to work with them. Think of spot factoring like a financial Swiss Army knife. Got one huge invoice you need cash for right now? You can just sell that single one. It's super flexible. On the other hand, you've got whole ledger factoring. This is more like a long-term relationship where you agree to factor all your invoices. That gives you a really predictable stream of cash, and because you're giving them consistent business, you get much, much better rates. So all of that brings us to the single biggest, most powerful advantage of factoring. And it's something that totally flips the script on traditional financing. When you go to a bank for a loan, whose credit score do they pull? Yours, right? Your business's, your personal credit. But with factoring, whose credit do you think is the key to getting approved? Yep, it's your customer's credit that matters, not yours. And honestly, this is a complete game changer. It means if you're a startup with zero credit history, or maybe you've hit a few bumps in the road financially, it doesn't matter. As long as you're invoicing credible, creditworthy companies like a Fortune 500 business or a government agency, you can get approved for cash, fast. And you can see this in the industries that use factoring the most. Trucking and freight is a huge one. Drivers have immediate costs like fuel and insurance, but they might wait 30, 60, even 90 days to get paid. Staffing agencies are another perfect fit. They have to make payroll every single week, but their clients pay them on monthly terms. For all these businesses, factoring isn't just a tool, it's a lifeline that bridges that cash flow gap. But really, when you boil it all down, the number one advantage is just pure speed. Look at this. An SBA loan could take 60 to 90 days. A regular bank loan, maybe a few weeks. With factoring, you can have cash in your hands in 24 to 72 hours. It's not even in the same ballpark. Now, if you're not sure whether factoring, an SBA loan, or maybe a line of credit is the best fit, a tool like BusinessLoan.Directory lets you see all your options in under 2 minutes. It's a soft pull, so no credit impact, and you can really compare apples to apples before you commit to anything. Okay, so now that you know how powerful factoring can be, let's talk about how to protect yourself. Because let's be honest, there are some predatory players out there. You have to watch out for a few major red flags. Things like vague or hidden fees, long contracts with insane termination fees, and especially this next one. I want you to burn this term into your brain, a confession of judgment, or COJ. It is without a doubt the most dangerous clause you can find in a contract. Signing it means you are giving up your right to defend yourself in court. If the lender even claims you defaulted, they can get an instant judgment against you, freeze your bank accounts, and you won't even get a chance to tell your side of the story. If you see this in a contract, you don't negotiate, you walk away immediately. But here's the good news. The whole landscape is starting to change for the better. Regulators and the courts are finally catching up and starting to put more protections in place for small business owners like you. For instance, just this year, federal courts started ruling that some of the most predatory merchant cash advances are really just disguised loans, which means they have to follow state interest rate laws. And starting in August, a new law in California caps those crazy early termination fees. So things are getting safer and way more transparent. So the takeaway here is to be smart and do your homework. Whether it's factoring, an SBA loan, or a credit line, start your search somewhere like BusinessLoan.Directory. You can see what you actually qualify for across more than 75 lenders, all in one place. It's free, it's fast, and it might just show you some amazing options you didn't even know existed. So I'll leave you with this question. What could your business achieve if cash flow was never a problem again? If this breakdown saved you time or gave you some clarity on your funding options, do me a favor and hit that like button and subscribe. We drop new breakdowns every single week on business financing, credit strategy, and cash flow. All the stuff your banker probably won't tell you. Thanks for tuning in, and I'll see you in the next one.